The new E, the new attitude. Brought to you by Mercedes-Benz. The global semiconductor crunch could get worse as the number of COVID-19 infections surge in Malaysia. A Bloomberg report said today that the country hasn't historically had the kind of importance to tech supply chains that Taiwan, South Korea or Japan do. But in recent years, Malaysia emerged as a major centre for chip testing and packaging, with the 7-day average for reported daily cases now past 20,000, up from just over 5,000 in late June. The outbreak is threatening the country's recovery efforts and plans to restore full production capacity at plants operated by chip suppliers, including Infineon Technologies, NXP Semiconductors, and ST Microelectronics. That's bad news for automakers, including Ford Motor Co., which last week said that it would temporarily suspend production of its F-150 pickup truck at one US plant because of a semiconductor-related part shortage as a result of the COVID-19 pandemic in Malaysia. The report quoted Samuel Tan, an analyst with Genanga Investment Bank, as saying that the situation could be very disruptive for Infineon and other firms that have plants of a few thousand workers and aggravate current semiconductor shortages. Citing research from Susquehanna Financial Group, it said chip lead times increased by more than 8 days to 20.2 weeks in July from the previous month. That gap was already the longest wait time since the firm began tracking the data in 2017. AirAsia Group has finally launched AirAsia Ride, the latest offering under the group's super app. The e-hailing service is available in Kuala Lumpur and will be rolled out in other states by year-end, before being expanded to the rest of ASEAN. AirAsia Group CEO Tan Sri Tony Fernandes had told The Edge in March that the group was planning to enter the ride-hailing business. According to AirAsia Ride CEO Lim Chu Shan, what sets its e-hailing service apart from competitors would be the unique insights and data it has. This is due to its position as a super app that owns an airline and has strong vertical products on e-commerce, fintech, logistics and now e-hailing. He added that this would enable the group to leverage its data and algorithm to provide a seamless journey from booking flights to pre-booking their rides to the airport, as well as for their return journey. Passengers will have the option to pick their preferred vehicle types and drivers, with the service undertaking a driver-forward concept, which will enable its drivers to improve their overall income. AirAsia Ride has about 1,500 registered drivers, with 5,000 more to come on board in the next 6 months. It aims to have at least 30,000 drivers going forward. AirAsia's shares closed up 0.6% at 87 sen, for a market capitalization of 3.39 billion ringgit. Nestle Malaysia says second quarter FY21 net profit jumped by 27.5% to 134.53 million ringgit, thanks to strong revenue growth which offset the impact of higher commodity prices and marketing expenses, as well as significant costs related to COVID-19 containment. Quarterly revenue increased by 13.2% to 1.38 billion ringgit, driven by robust domestic sales growth of 15.8%, thanks to an 8.4% growth in its core F&B business and a rebound in its out-of-home business. The group declared an interim dividend of 70 cents per share. As for the first 6 months of FY21, earnings rose 6.1% to 309.69 million ringgit, and revenue rose 6.6% to 2.83 billion ringgit. Moving forward, its CEO Wan Aranos highlighted that the main challenge for the balance of the year will come from the impact of rising food commodity costs that it has mitigated through its hedging policies. This impact, he said, will become more noticeable in the months ahead, but the group remains confident of delivering good sales growth and resilient bottom-line performance this year. At the close, its shares traded 0.22% higher to 133 ringgit and 90 sen, giving it a market capitalization of 31.4 billion ringgit. Berjaya Corp CEO Abdul Jalil Abdul Rashid says the diversified group via subsidiary Berjaya Land is now the largest hotel operator in Iceland, with 1,471 keys across 14 hotels under various brands. Abdul Jalil tweeted today the global hospitality sector has been challenging for the past 18 months as the industry contends with movement restrictions. He said there is almost zero revenue, but with elements of fixed cost that can't be removed. However, he added that the group's Iceland hotels have bounced back very quickly due to COVID-19-led quarantine restrictions being removed. Berjaya Land operates hotels in countries including Malaysia, Vietnam, Japan, the UK and Iceland. In Iceland, Berjaya Land's website indicates that its hotels are owned via Icelandair Hotels, under which several hotel names including Hilton and Edda are parked. Berjaya Corp's share price closed unchanged at 26 sen for a market value of about 1.4 billion ringgit, while Berjaya Land's shares climbed 3.7% to 28 sen for a market value of about 1.38 billion ringgit. The Naga National, or TNB, says it has, via its subsidiary TNB Topaz Energy, divested its entire Tranche 1 investment, comprising 105.6 million units, in a compulsory convertible debenture, or CCD, issued by India-based GMR Bajoli Holi Hydropower for 1.18 billion Indian rupees, or about 67.04 million ringgit. In a statement to Bursa Malaysia, TNB said the move is aimed at streamlining its international portfolio as it is defocusing on India and shifting its effort to pursue growth in its focused markets, such as the UK, Europe and Southeast Asia. It said the divestment is also consistent with TNB's initiatives to seek monetization options for its assets in India and other non-focus markets. The utility giant did not specify in the Bursa filing today when the divestment took place. At the close, TNB's share price settled up 1% at 9 ringgit 97 for a market value of about 57.1 billion ringgit. This program was brought to you by Mercedes-Benz.